What I would love to point out to my MMTs moving forward, we got a couple more weeks left of the earnings season, and all the hype is going to be built in these stock prices. I'm 92.45% overbought on a monthly chart. Since we started the buy signal here, technology and semiconductors led the way off of the bottom. Heavily related tech, great earnings over the last 2 years plus this quarter. That's 9 quarters. All great for the bull. We loved it on the way down making money, but we loved that expansion that started. We have traded them over a multiple of over the last couple of decades, and every bear and bull market, overbought or oversold market, we've participated. What I am here to tell, the bigger part of our thing is 92.43%. Our upside is limited, so the profits need to be taken across the board in all portfolios. Yes, they do. Because we are going to hit to a point within the next trading days, which is 2 weeks, is that it's going to take a lot more money to run these indexes higher. The good news is priced in. FOMC meeting on April 27th. Cheap dollar isn't going to stay cheap for very long. Everyone is short the dollar. When that dollar goes higher, equities are going to sell off. Commodity prices, will be looking at shorting them at all-time exuberant, irrational exuberant levels that we've ever seen because of the policies that are made here using financial instruments that automatically re-leverage assets all the way up to the top. This is why all of these things can potentially end up in a very, very, very bad way. It's great when we get these great bull trends off the bottom. And it's great when they fail. And we did them all over here. Here was another great 2002 bottom that we did. This was the expansionary period. Well, this expansion started in 2009. It held in 2010. And we're in 2011 in the 4th month. That means that there's going to be 8 months left of the 2011 cycle. What it means is on the NASDAQ comp, we're reaching overbought extreme areas on a monthly chart. We're going to have another correction. That correction is going to be related to key Pacific indexes and indices and sector rotation, right along with some profit taking because the upside is limited. Right now, we're going to hit this 2841. That will be the top, and we're going to get up to that 3,000 level. That's where it's going to really have a problem, and we're approaching these tops right now. We're right here. You can see them. The upside is limited. When the correction starts, it starts with a reversal bar on a monthly level. We'll use the daily and the weekly to confirm it. We'll use the SMF platform. What I am saying is in the next 10 trading days, as the big tech bellwethers on the NASDAQ comp report their great earnings, as they have, about 70-some% have beat and 30% haven't. But let us not forget about what you're paying at the pump. Let us not forget what you're paying for your food. Let us not forget what you're paying for your energy. Let's not forget that there's going to be a point in 2011 where it starts to affect the profit margins. That cheap dollar goes higher, we correct. The inflated commodity, it's so irrational exuberance, and it was the kinds of things that happened in the 1930s off of that depression that we had. And as far as I'm concerned, when we started the reversal here, we called it. We were short the whole year. The thing about it is, and we loved it down here because no one wanted to buy here. And everyone was in denial all the way down. They were all in denial. No recession, all in denial, denial. Just like they're trying to say at $5 a gallon gasoline that that's not going to hurt us. Sorry, get a grip. Now, granted that U.S. companies have leveraged themselves in a bull trend called emerging market bull trend. This particular U.S. market is just now catching up with those overbought markets that have been overbought 6, 7, 8, 9 months ago, and money kind of rotated and kind of shoved us all the way up here to the highs. However, I declare a bear trend reversal. I didn't say bear market. Let's be clear. Let's not make it something that I'm not saying. But let's be clear. Just as we were clear in the first reversal in the month of February. So when we look at the upside, We're market makers on an intraday level. We make money between the buyer and the seller. None of this really matters to my MMTs. But it does matter to the poor people out here who get caught at the top. And that's why we're doing it. It's because of our compassion. Otherwise, we wouldn't be telling you ahead of time. And let's get that clear. Each time we've called a market, it's done it. Each time we've called for a reversal, it's done it. And I'm telling you here today that the upside is limited. And there will be a bear trend that comes into play. And there'll be another bull trend. But as we work our way through the second half of the year, and as we get into the month of May, it could be very nasty. Oh, why? No more earnings till July. If we continue to go higher and we break above the $5.50 mark for premium unleaded and regular unleaded, and we've already seen in the four major categories, travel and leisure, restaurants, lots of things that consumers have to pull back on. And they're only going to spend. Oh, and there's also one of the things is where they start saving money because they're terrified. So Wall Street and Main Street have a big disconnect. Wall Street is what we do, but we're not part of their little cheap gimmicks or their little cheap manipulative ways or their little deception ways. We're not part of that. We just take them, hey, we take them for as long as they want to go higher, and we take them lower for as long as they want to go lower. And the thing about it is, NASDAQ comp reversal around the corner, 10 trading days, starts in May. As we wind down the earnings seasons, there's little catalyst to go. If we remove all of that stimuluses, and let us not forget, you can never get, the only way that you can get ahead of inflation is to raise the overnight money rate. Got to get back above 2% overnight money. Hardly anybody's buying houses anyway. Who cares? The thing about it is that you got to remove the liquidity at a certain time. And Bernanke hasn't done it. He's probably going to do it this week. He's probably going to say we're going to have to remove it. The economy has recovered so far with all of these stimuluses. The U.S. economy, the productivity has done extremely well. There's lots of things that have done well. Anytime you throw enough money on something at the taxpayer expense, sure, it's going to do well. We know that. And it's great to take the moves for why they're going in that way. But the end result, oh boy, ends up in a real bad way. It'll all come clear to you at a later date. We're looking for an overbought NASDAQ comp. Trade management with my MMTs and the whole trader network is to get to a point where we're going to get so overbought. Everything that gaps up in pre-market is a short. Once the earnings wind down, there's no more ether. The upside is limited. The short side of the execution will be coming into the tape.